Welcome back to News Tonight. Now, as the cement prices begin to strengthen, the builders are worried about what it means for their profit margins. The worried builders have come out all guns blazing in a protest, demanding state intervention. Let's take a look.
As cement prices reach for the skies, so are the tempers of property developers. Stalling all construction activities across the state, builders and associated bodies poured out on the streets to protest today. Infuriated with what they call cement price cartels, the builders put forth some aggressive demands.
The demand is to fix a regulatory authority to control the price. Our demand is to bring cement under Essential Commodity Act. Our another demand is, if cement manufacturers are not going to heed the request of the government, government should nationalize cement factory.
As the price of cement takes a steep climb, experts do believe that builders are forced to import cement from neighboring countries such as Pakistan, Bangladesh and Iran. Construction heavyweights are also claiming that the spike in prices will impact the workers as well as customers.
Direct cost impact is about 40% already because of the price increase in cement, sand, jelly, aggregate, steel, all this material. So we expect at least about 20% increase in the next few months in the end product.
However, from the thousands who poured out, a vast majority were labourers and construction workers. And some confessed off camera that they were instructed by contractors to turn up for the protest.
Now, are these the visuals of corporate muscle acquiring the humble garb of common man's problem, or valid concerns being raised by industry captains? That's one question the Chief Minister will have to ponder over as they take their voices to M. Karunanidhi. This is Ashmit Kumar with camera person Pradeep reporting for NDTV Hindu. Right now, there seems to be no end to the government hurdles in aviation expansion plans at the airport. If the proposed Greenfield airport has safety issues and landowners are revolting, plans to build the secondary runway at the Chennai airport have led to turbulence on the ground. Residents of a neighborhood colony are opposing the government's move to take over their land. They claim it's in violation of the approved acquisition plan. Sam Daniel gives us a look whether into these residents have turned into soft targets.
The Sharmas are a worried lot. The Chennai airport expansion threatens their house. This area was not part of the original acquisition plan for the secondary runway. Nothing has come officially yet, but there's panic among residents that the entire colony with more than 50 houses will be razed.
They don't give us a clear picture, no notification. They just walk and take photographs of the houses. They have taken the aerial survey.
With kids and all, where I will go?
We have taken hefty loans from the bank.
The government's plan for a parallel runway did not take off earlier, as it allegedly did not want to acquire land owned by politically powerful people. Its plan B, to evict 7,000 people from another neighborhood, met with huge protests. Residents here say they've become soft targets. The collector says he's just a facilitator, but airport authorities refrain from commenting. While people live in fear here, transparency seems to have become a casualty. In Chennai with camera person Edwin, Sam Daniel, for NDTV.
Right now, moving ahead in some national news, the Income Tax Department is conducting nationwide raids on Commonwealth Games contractors responsible for landscaping, street lighting, track laying and sports equipment. Over 300 taxmen are involved in the raids taking place at 60 locations across the country. NDTV has learned that in Kolkata alone, raids are on at 30 locations. The taxmen are looking for unaccounted income of attempts to suppress profits. Some of the key companies being raided are Shiv Naresh Sports in Delhi. They had the contract for sports accessories and laying of synthetic track surfaces. Another company that is on the radar is Sweka Partech Engineers in Delhi, the contractors for electric poles, bulbs and street lights. Another company that is featuring in the list of the IT officials is MBL Infrastructure in Kolkata. As many as 30 locations of this firm are being searched in Kolkata. And finally, Satya Prakash and Brothers in Delhi, they had the contract for streetscaping and beautification. Well, the stock markets today saw a turbulent close with a sharp drop being the highlight of the day. With expiry and Q2 triggers pulling down the markets, let's take a look at how they actually performed today.
Well, the expiry has been completed. The October series is behind us, November series is in front of us, but this market has taken a turn to the negative side. Let's take a look at what happened on the Sensex Nifty on the all-important expiry day, on which we saw volatility not so high, but still the bearish sentiment in the market has come back a little bit in the sense. That's the Sensex chart for you, ending below 20,000. The Nifty chart also just about emulates the Sensex chart, ending below 6,000. Of course, the selling pressure was visible right from the word go as far as the benchmark indices are concerned. Couple of other aspects which are worth talking about right now is the way the sectors have panned out. And of course, we did see that the rate sensitive sectors took a bit of a knock, that too before the all important monetary policy meet on November 2nd. Real estate came off, metals of course came off on account of the stronger dollar. We saw banking stocks correct quite a bit, and technology stocks continue to be under the hammering side over the last few days or so. On the earnings side, sale numbers were a little disappointing. PNB's numbers were okay, but some of the stock came off a little bit. Bank of Baroda posted decent set of numbers. Even IDFC Bank came out with good set of numbers. So banking stocks have posted good set of numbers, not so great coming in from the metal counters, and that was evident in the way the stocks actually sold off. Couple of interesting stocks there. Look at the interesting group we have. S. Kumar's, Provogue, Shoppers Stop. So the branded apparel retail space also seems to be now picking up pace. Textiles were also a big thing that this market has been seeing a bit of attraction, but this is important. Also, as far as the earnings picture is concerned, from a next day point of view, few stocks I want to talk about. Hero Honda, just watch out for that one. ICICI Bank, the outlook on credit growth is important. Mahindra & Mahindra, what's happening on the margin side, and of course on ITC, what's happening on the cigarettes business. So 4-5 big companies that come out with numbers today. What's more important is if these numbers are in line with expectations, and come Saturday we see RIL being in line, perhaps the markets may pull back, but it's tentative ahead of that all-important RBI policy meet.
Right, so sensitive being the word there, sensitive stock markets. Moving ahead, one of the world's costliest bean machines is in India. Will this be a total sellout? More on that on the other side.